please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's invite then our market master for the day, Gautam Shah, director and technical analyst at JM Financial. Gautam, good morning. Quite a bit of volatility is what we have seen in the month of May. You reckon it's a precursor to the kind of move we may have for the second half of the year?
Well, Anuj, the month of May is known for its volatility. I mean, if you look at the historical track record of the last 20 years, this is typically what happens. But I think this volatility is actually healthy from a market's perspective, because I think the Nifty has really digested this 900-point rally that it saw prior to the Karnataka state election results. So that move of 10,000 to 10,900 has been digested with this volatility that we've seen in the last few weeks. I think the market has just got into that consolidation band of about 10,400 to 10,700, and I think it could stay within this zone for a few more sessions, and eventually, you know, maybe over the next couple of weeks you could actually see a breakout beyond 10,700, and once that happens, you should see the Nifty, you know, inch towards the level of 10,900 once again, and then possibly towards new lifetime highs. So we still have evidence on the charts to believe that this market is clearly headed higher. I think the series of higher tops and higher bottoms is likely to continue throughout the rest of this year. And this consolidation that I spoke about is really the foundation of the next big 10% move that is likely to come in on the index. And we expect that to play out, you know, in the next 6 to 8 months. So once we have that breakout beyond 10,700, you will have triggers in place to believe that closer to the end of this year, you could see the Nifty at 11,800 levels. So we would be positive. I think locally, the manner in which the indices have handled the volatility in politics, that itself is a very positive and a very mature reaction. And even if you look at the geopolitical news flow, it's really been all over the place in the last couple of months. But every time there is geopolitical turbulence, Indian markets turn low beta, you know, so they fall less on very bad days for global markets, and they rise less, you know, on very good days, which is a good place to be in, because as I say again, this is a very mature reaction by Indian markets. So all in all, I think we would be positive until the Nifty is trading above levels of 10,400. We are of the view that we are clearly headed much higher and into new lifetime highs.
Okay, that's a great start to the conversation, Gautam. But just to belabor a technical point, while there are higher bottoms, it is also lower tops, isn't it? I mean, if we go back 6 months or even 5 months, 11,000 and then 10,800 and now 10,700, is that a worry that it is also showing lower tops?
No, I don't think so, Lata. I think let's understand where we are coming from. 2017 was a great year for Indian equities. We almost saw a vertical run-up. In that period, the Nifty was up 25–30% without even a 5% drop. So at some point of time, you know, a retracement had to happen. That retracement happened in the first quarter of this year after the budget, you know, after the geopolitical announcements. And, you know, post that retracement, you again have the Nifty, you know, getting into this sort of a band. So it's not breaking support levels. In fact, it's trying to respect support levels every time it comes close to it. And this is something that we've seen a few times in the last a couple of months. In fact, I would strongly want to believe that 10,000, 10,200 is now the new investors base for the next year and a half. Until that level is broken, there is no reason to, you know, change the medium-term stance. Also, if you really look at it, you know, as we got into the month of May, there were 3 external concerns which we were a little worried about. I call it the BCD, which is the bond yields, the crude factor, and the fact that the dollar was doing so well. And now with what has happened in the last couple of weeks, I think these risks have ebbed quite a bit, because the bond yields have had the run up in the US, and it's cooled off from that level of 3.10, which was a sort of our target. Crude, we had spoken last time of NYMEX testing close to 74. It got almost there and it has come off quite a bit. And the dollar, you know, 68.5. I think that's a level from where we've seen a reversal. And even the dollar index, I think from around 95, it is likely to see a reversal. So with these 3 very important global external factors sort of, you know, ebbing a little bit, I would like to believe that Indian markets can play on the local positives and go on to make higher highs going forward. And there are too many people in the market who want to believe that this is a precursor to a very big fall. I don't see that happening, because while the index has been rock steady, Look at pockets in the market. The mid-cap index has fallen 15%. The oil and gas index has fallen 30%. The metals index has fallen 15%. So the damage is there. It's not being reflected on the index because I think the big boys, the top 5, 7, 10 names in the index, they are too big to fall. And I think they are being supported by domestic money. And that's probably the reason the index will not do too badly the rest of this year.
Okay, yeah. I mean, when everyone wants the market to fall, it generally does not oblige, as we have seen in the past. Gautam, hi, good morning. So let's talk about sectors now. I know everyone talks about IT, but the sector that has really kicked it out of the fence this year is FMCG. I mean, the BSE FMCG index is up almost 40% or so. You think it can continue to rally this way for the rest of the year?
I think so, Sonia. You know, every bull market brings in new sectors. I think we've seen that in the last decade and a half. And this time it's led by FMCG and IT, you know, which is great because these sectors are known to be slightly low beta, and yet, you know, they are performing so well. If you look at the FMCG index, it's actually hugging on to 52-week highs almost on a daily basis. And whenever an index does that, it's a very positive sign. And there are indications there is much more juice left in this rally. So we would be very positive in on the FMCG space right now. And I think there is another, you know, 5 to 10% to play for at least. Again, the move is so secular, so big in nature that it's difficult to give pinpoint targets. But the overall trend for FMCG is positive and it's going to take the market higher. On the other hand, IT, you know, it's been such a great mover in the last 3 months. It's provided great support to the market. You have some really important bellwether stocks out there. And with every new high that the IT index makes, there is this pause which keeps happening from time to time. And I think that's again a very encouraging development. So CNX IT also, we have a target of about 15,000, which is a good 1,500 points away from where it is right now.
Okay. You know, we have spoken about metals and you have been able to, you know, carry this entire rally, Gautam. But where are we right now in terms of the cycle and, you know, what are the chart patterns indicating here?
Well, Anuj, after the global announcements, you know, from the Trump administration and with developments locally and the commodity prices, you know, metals have taken a little bit of a backseat. I wouldn't say that the story is over, but it's just that it's got into a sort of a range. And I think the metals stocks will see a very gradual recovery from current levels. And it's also a very stock pickers sector. So you have certain stocks which are doing exceedingly well. You know, JSW Steel is a case in point. And there are certain, you know, stocks that have just come off 20-25% just like that. I would like to avoid metals and oil and gas just for the time being because I think there are much better bets in the market. And I think banking has once again come to the forefront. And look at what the Bank Nifty has done in the last 1 month. Phenomenal run up. It's back to being the Pied Piper. And I see this U-shaped recovery in the Bank Nifty, you know, taking it all the way to 27,500. So while the private sector banks are already doing well, I think for the first time you are seeing some glimpse of or some ray of hope in the PSU banking space because the lower low that you saw on the PSU bank index, you know, has not been seen on some of the indicators. So maybe there could be a sort of a cool-off rally which takes place, which will help the Bank Nifty move towards a target of 27,500.
Okay. Gautam, I just wanted to hark back. Okay, just a word on the markets. Clearly, the morning has not belonged to the mid-caps. It's belonged to the large boys. Albeit the advanced declines are fairly strong, 2:1 almost. But the mid-cap is moving into red terrain. So just keep an eye on that. There is a lot of volatility in the mid-cap space just for the moment. And as well, the oil marketing stocks are going down, BPCL types. Gautam, to come back to the target that you're giving for the Nifty, which kind of stocks? You spoke about FMCG, but what will lead the market to 11,000 plus?
Well, I just spoke about it, Lata. I think FMCG, banking and IT. I think for now, these are the 3 pockets in the market which will definitely take it higher. And I see this being joined by auto and capital goods at some point of time in the next, you know, a few weeks. Okay. So these are probably my 5 best bets. But, you know, the point that you made about mid-caps, I think that's really been the talking point in the market circles, that portfolios haven't done well. Market is still steady at 10,600. And, you know, the CNX mid-cap index is down 15% from its highs. So the pain is there in the broader markets. And when I look at the broader market charts, I think 18,000 18,300 on the CNX Midcap 100 is a very important support. It was the low in the last week of March, and it has been the low in the last week of May. And I'm hoping that the CNX Midcap reverses from around this 18,300 level. And let me also tell you that while the Midcap index has lost 15%, you've had stocks, the best of names, stocks backed with numbers, having fallen 20, 40, 50% just like that. So I think the separation of men from the boys has already taken place. And I would like to believe that all those stocks that have not fallen in the last couple of months are probably going to be your best performer in the next 12 to 18 months. And those are the stocks investors should look at this point.
In fact, one of the stocks that you've liked is Bata from the FMCG space. So just to take that discussion forward. But the argument here is that this stock has already seen a big run up. You wouldn't be worried about that. The charts are still looking good. And anything else in the FMCG space?
Well, I cannot comment on specific stocks, Sonia, but consumption, I think, as a theme is here to stay. And I think when I look at it across the board, I see a lot of strength. So that's a space. If you basically believe in the India story, you have to believe in consumption, and that's pretty much visible on the chart. So I would be very bullish on overall as a space.
Okay. 11,800. You have company there. When we last spoke to Lawrence Belanco, he also was speaking about 12,000, right?
Yeah.
And in 2018. Well, that's a great number to watch out for. But one of our perennial problems, crude, how is that chart looking, Gautam?
Well, I spoke about it earlier, Lata. I think I've been a little worried on this account for the last couple of months, because when it broke out about 63, 64, we were working with that target of 74 on the NYMEX crude. I think last week it tested a level of 73, and from there it's cooled off. And I think that swing cycle has really got completed. So I don't think crude is going to be a problem anymore. When I say anymore, at least for the next quarter, and it could just stabilize in the band of 62 to 72, which I think is great news for India. So it was never a concern when it was rising, and if it falls, obviously a lot of people who look at things half glass full will want to latch onto it and say that, oh, since this has happened, Indian market should do well.
All right, Gautam, always good talking to you. Thanks a lot for joining us today.